Hello learners, welcome again to Manifested e-learning platform. Today I would like us to proceed with our public finance. Remember we are looking at the second topic which is about the public funds in public sector or establishment of public funds in public sector. Today we are supposed to look at the last three subtopics, which are establishment of the consolidated funds, sorry, not consolidated fund, that is contingency fund. We have also equalization fund and sources of county government revenues. So those are the three areas that we are going to cover in our lesson today. So let's start with the establishment, and that is establishment of the consolidated, the contingency fund. That is establishment of contingency fund. Establishment of the contingency fund. As far as this subtopic is concerned, we need to understand what is a contingency fund, and we also need to understand also some of the provisions that are related to the contingency fund, and we also need to move to an extent of even understanding when advance can be made when it comes to payment. Remember, not all cases, that not all transaction or events can qualify to get access from the consolidated contingency fund. So there are some things that there are some events, or there are some things that can occur that we can end up declaring them as emergency, and that is when now we can access money from the contingency fund. So we are simply asking ourselves this question in our lesson today, that what is a contingency fund? And a contingency fund is simply a fund that is created by the government for the purpose of catering for emergencies. There are some instances whereby a catastrophe can occur in our country. For instance, we can have severe droughts, we can have heavy rains, and some of these things they affect negatively the environment and the lives of human beings. That is why we have set aside this particular money, or that is why the government created this particular fund to address such particular problems. So contingency fund, we are saying, is simply a fund that is created by the government for the purpose of catering for emergencies. So contingency fund is a fund that is created, by the government, for the purpose of emergencies. This emergency will include, for instance, we can have like a serious drought, we can have like a heavy rain, things that the government may not be able to make proper provision, or may not be able to say in advance. We refer to them as unforeseen event. So in case we have such, then we need to access this money now, so that we can utilize it to address those particular purposes. There are some provisions that guide the operation of contingency fund, and we need to understand some of these particular provisions, or how we operate a contingency fund. So operations of, let me talk of operation or management of contingency fund. Operations or management of contingency fund. Operations or management of contingency fund. One thing that we need to understand is contingency fund amount, it is appropriated from the consolidated fund. That is the amount that we have in the contingency fund. It is normally appropriated from the consolidated fund as per the Act of Parliament. That is money belonging to contingency fund is appropriated from the consolidated fund, is appropriated from the consolidated fund, because it's the government that is setting aside money to cater for the emergency. And there we had seen previously that a consolidated fund is a total fund that is raised by the government. So part of this particular money is the one that we are setting aside to cater for the emergency. So the other thing that we need to understand under contingency fund is the CS or the cabinet secretary is the one who is supposed to administer the contingency fund. That is, the cabinet secretary is responsible for administering the contingency fund, is responsible for administering the contingency fund. So it's the one who is in charge. In case we have misappropriation or like misuse of this particular fund, the CS has to come up and explain to the members of the general public, or he need to be summoned by the members of the National Assembly and answer some questions in relation to the same. So he's the one who is supposed to make sure that a contingency fund is not misappropriated. The other thing that we need to understand still under contingency fund is that contingency fund is supposed to be kept in a separate account. It's not supposed to be mixed with other funds. So contingency funds or money should be kept in a separate account, account. It should not be mixed with other funds, and therefore we need to ensure that that amount is safe and it is only utilized when we have cases of emergency. Still on the same, we need to understand when we can advance this particular money. We are saying not all cases whereby not all events can arise and we release this particular money. So when do we expect to advance money to cater for emergency? So there are some cases whereby we are allowed by the Constitution to advance money, and we term that particular case as an emergency. So when are we supposed to advance money to cater for emergency? So we can talk about situations when money can be advanced. Situations when money can be advanced to cater for emergency. We have a number of cases that are stipulated by our Constitution, and those cases we refer to them as emergent, and that is why we advance money. One thing or a scenario, case number one is if it is urgency. In case of urgency, in case of urgency, in case of urgency. So if that is the case, then we can term that one as an emergency and we can access that particular amount. The other thing is the other thing that can make us to advance that money is if the event is unforeseen. That is the event is unforeseen. You are not able to contemplate that particular event. So if that is the case, then you have to access that particular amount. The other thing is if the matter cannot be delayed, if the issue cannot be delayed. You find that if you delay that particular issue, then you can find yourself in problems, and therefore if that is the case, then you are supposed to access, we need to advance that particular amount. The other thing that can make us to advance the money is if the event is threatens to damage the environment. That is the event threatens to damage the environment. If that is the case, then that is we need to advance the money. The event threatens to damage the environment. Again, if that is the case, we need to advance the money. And still, last but not least, is if the event threatens to damage the life of human beings, the life of human beings. If again the event threatens to that event threatens to damage the life of a human being, then again we need to access that money and we save the life of those human beings. And with that then we come to the end of our contingency fund. So I would like us to move to our second area, that is the other subtopic, which is establishment of the equalization fund. Establishment of equalization fund. And what we need to ask ourselves first is, what is an equalization fund? What do we mean by equalization fund? And when we talk about equalization fund is simply a fund that is set aside by the government for the purpose of promoting marginalized areas. I expect you to understand that in Kenya, the way the counties are, they are not equal in terms of resources and in terms of development. So those counties or those areas that are not developed, we refer to them as marginalized. And therefore, we need to make them grow and to attain the level of the other counties. For instance, we have like Nairobi County, which is highly developed, Kiambu County, which is highly developed. We cannot compare these counties with like other counties like Wajir, those counties that are in northeastern part of the country, because even though there is a problem, if you look at Nairobi County, roads are there. So we need to give these counties extra fund so that they can grow to the level of the other counties. So the amount we allocate to like Nairobi County, we add extra money to the other counties which are marginalized so that they can grow to that level whereby they can be at par with the developed counties. So equalization fund is just a fund that is set aside in order to promote marginalized areas or to develop marginalized areas such that they can attain the level of other developed areas. So equalization fund is a fund that is established by the government for the purpose of promoting marginalized areas, for the purpose of promoting marginalized areas or counties. That is to make them at par with other developed counties, So that is the equalization fund. But we also need to see more about management and also operation of the equalization fund. So let's talk about management or operation of equalization fund. Management or operation of the equalization fund. So what do we need to understand about the equalization fund? We have some provisions that we need to understand concerning the same. One of them being the equalization fund is not supposed to be overdrawn. That particular fund should always have some money. That is, the equalization fund, should not be overdrawn. In other words, it should always be having some amount for that purpose. The other thing that we also need to understand, and as far as equalization fund is concerned, is that money belonging to equalization fund should be kept in a separate account. So money belonging to equalization fund should be kept in a separate account. It should not be mixed with other money to avoid misuse or misappropriation. So we need to have a separate account to handle that particular amount. The other thing that you also need to understand under equalization fund is that again, if we have some balances of this money that is remaining, that money should be retained so that it can be utilized in future for the same purpose. So we are also saying that any balance, any unutilized balance in equalization fund should be retained to be used in future for the same purpose. That is, if this money remains, we don't want to find some people getting a chance to misappropriate this particular amount. No, 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 no. That money should be retained very well. It should be under safe custody, remain in that particular account so that it can be used in future for the same purpose. The other thing is for any amount that is supposed to be transferred from the consolidated fund to equalization fund, because again equalization fund, we get this amount from the consolidated fund, it has to be authorized. So we are also saying that transfer to consolidated transfer to equalization fund should be authorized. Transfer to equalization fund is supposed to be authorized, and this is supposed to be done without undue delay. There should be no delay when it comes to transferring this particular amount. That is, we can also say that there should be no delay in transferring the amount. And so much so good, I can say, for the equalization funds. And I want to move to the last part, which is our last subtopic in this particular topic, which is county revenue sources. So let's wind up with county revenue sources. County revenue sources. In other words, we are asking ourselves, what are the sources of revenue of the county government? What are the sources of revenue of the county government? One source of revenue of the county government is we have like the land rate. So remember, the county government, the owners of especially of leased assets, leased land or leased titles from the government, they pay land rate to the government, and that land rate add up to be a source of revenue to the government. So land rate, we are saying, in most cases is not owned by freehold titles. It is paid by leasehold, the persons who own leasehold titles. And this one is subject to renewal. It is paid every year. Then we also have another source of revenue, which is rent. You also find that the county governments also collect revenues in terms of rent. For instance, in markets whereby they have constructed even like stalls, and they collect revenue in terms of rent from those people who are doing business in those particular houses or stalls, and therefore again that also acts as a source of revenue to our government. The other source of revenue to our government is equitable share from the government. Equitable share from government. Equitable share from the government. So we find that all county governments must get a certain proportion of share from the national government, because when the national government raises money, part of it is shared among the county government. So that share that we get from the national government also acts as a source of revenue. The other source of revenue is fees. Fees, for example, we have trade license fees. Trade license fees. For you to operate a business, you need to pay a license. You need to pay a fee to the government for you to get now the trade license so that now you can be allowed to operate by the government. So fee will also act as a source of revenue also to the government. We can also get the fee also in terms of parking fee. Parking fee. Remember when you park again your car in a town, then you are supposed to pay also parking fee, and that fee also acts as a source of revenue to the government. We also have county government loans. County government loans. County government loans. County government loans. These are loans that are belonging to the county government. A county government can also borrow maybe from also like IMF, World Bank, and what? And also these act as a source of revenue also to the county government. The other source of revenue belonging to the county government is donation. Donation. Sometimes also you'll find that World Bank, IMF can give donation to the county government, and that is utilized also for the purpose of developing the county. Those donations also we refer to them as a source of revenue to the county government. We also have conditional grants. Conditional grants. Conditional grants. And when we talk about conditional grants, it's just extra allocation the county government can get from the national government. But we say primarily we get equitable share. But you can get also an extra share from the national government. And that extra share from the national government, we can refer to it as conditional revenue. And with that, we come to the end of that particular topic. So we have understood a number of areas concerning public funds. We have seen the categories of the public funds. We have also seen how they are created. We have seen how they operate and all that. Therefore, we need to have some assignment now so that at least we can do practice on what we have discussed in that particular topic. So we have a revision partner, which is our revised book in Public Finance and Taxation. So I will give you some questions on this particular book from the book so that you can use them for revision purposes. Then we look at some of these particular questions also during blocks. So as far as this topic is concerned, we have May 2018 question 2A. We have a question relating to CRA, and I can read that question, only this one. Identify 4 factors that are considered by CRA on revenue allocation or equivalent body when selecting marginalized areas for the purpose of allocating the Equalization Fund. We have talked about Equalization Fund here, and we have said that Equalization Fund is a fund that is used to cater or to promote those areas that are marginalized. So somebody is asking you, in order to say that an area or to conclude that an area is marginalized, what do you expect CRA to consider? So I would like to get some of those points. For instance, like the area, like the level of poverty and what. The other question that I would like you to look at is November 2017, question 1C. I would also like you to look at a November 2016, question 2A. It's also about the same area. May 2016, question 2B. And my final question will be November 2015, question number 2A. So I would like you to look at those particular questions. You give your own suggestions. And again, I have also come up with some solutions in this particular book. So after you complete, I would also like you to compare your solutions with what I have given in this particular book. So with that, therefore, let's come to the end of that particular class and also to that particular topic. So see you next time so that we can proceed with our next topic. Thank you.
Thank you for watching this video. Don't forget to get yourself a copy of our professionally prepared study text and revision partners.